Hi, everyone. I'm Terry Conley, and I am so glad that you're able to join us tonight. We do have some amazing presenters with us, and I'm so excited to introduce them to you. Just speaking previous to me is Lena Dion. She's our, as she mentioned, she's in charge of our mortgage department at Triangle. We have Ryan Campbell, who's a mortgage originator, Jody Landry, who's a local real estate expert with Keller Williams. Peter Yetman and Sally Burke are both from Genworth Financial, and they're going to be talking about private mortgage insurance. And Bob Parodi does a tremendous amount of our closings, and he's going to talk to you about what to expect during the closing process. So with that, I do have a couple of things that I did want to mention. We are going to have questions. We're going to take questions at the end of each segment. And so if you could please use your chat, we'll be monitoring any questions that come through on the chat, and we'll address those after each segment. If we have time at the end of our presentation time, we're also going to open it up for some additional questions. But if you could just submit all of your questions through the chat, that would be perfect. And then you're going to hear from me more towards the end, and we're going to talk about like next steps and how you can access this presentation and everything. But with that, I'm going to go ahead and I'm going to pass it over to Mr. Ryan Campbell.
Hello, can you hear me?
We can.
Perfect. All right, well, thank you, Terry. My name's Ryan, and I am one of the mortgage originators at Triangle Credit Union. Now, I know this past year's been a lot different than most of us are pretty much accustomed to. So I want to once again kind of just thank everyone for taking the time to log in and join us tonight. I know most of you should have your microphones muted, but I just want to let you know if you have dogs barking or kids that need snacks. I have kids and animals too, so I completely understand. Now, a little bit about me. I've started in the mortgage industry in 2005. And I've worked in New Hampshire and in Florida. I recently moved back a few years ago, and I've been with Triangle Credit Union now for about 3.5 years. So if you want, we can start with the first slide. So these are the first steps to applying for a mortgage. Now, step one is going to be, you're going to end up meeting with a mortgage originator. And the mortgage process, it really can be broken down almost into two different phases. And the first one is going to be getting pre-approved. In order to do that, you would reach out to Triangle Credit Union, and you'd work with me or one of my colleagues who would work with you either in person or over the phone, depending on whatever you guys are most comfortable with. And we'd work with you on kind of getting a formal application started, which is going to allow us to see some of your preliminary numbers and to view your credit report. Now, this is a first-time homebuyer seminar, so I think it's pretty safe to assume that none of you probably own a home, or if you have owned a home, it may have been a while and you're looking to purchase again. There's a lot of moving components in this industry, and everything is constantly evolving and changing. So unless you're an investor and you're doing this constantly, if you bought a home last year and you were going to do it again today, probably would end up being a little bit different than what you were accustomed to. So we really want to make this as easy as possible for you. So you don't really have to worry about the guidelines and all the changes. Your job is making sure that we get you in the right program that's going to meet your needs. So we're going to discuss your payments and what you're comfortable with, so that way we can make sure that we're kind of finding a home that you can afford. Now, to me, I feel like this is probably one of the most important steps in the entire process, and one that I typically do like to spend a lot of time on. The person that's going to know you best is you. During this process, we collect a lot of documents and we get to know a lot about you through all the things that you provide, but that's going to help us with qualifying numbers. For some people, it's not about what you can afford on paper, but what you're actually comfortable spending each month. And that's one of the goals for us to try to get to. For most people, your mortgage payment is probably going to be one of the highest financial obligations you have. And buying a home really, it's supposed to enhance your life, not limit it. So by getting the right loan amount, it's going to make sure that you can live the type of life that you want. So one of the main things that I typically like to suggest to people is make a list of things that are most important to you. And some of that stuff could be, do you like to travel? Maybe you hate cooking and you either go out to eat or you get takeout 7 days a week. These are all things that you want to account in your budget. Now, I like to cook at home, so it's not a big deal. And during quarantine, I think I ended up learning how to make bread and homemade pasta. But towards the end of it, I think my delivery guy pretty much knew me by first name with all the amount of food I ordered. So now, maybe you just have a really expensive hobby. Now, I can use me as an example. I have kids and we've tried dance classes, we've tried karate, soccer, violin. But in the end, the only thing that both of them like doing is horseback riding. And horseback riding is probably one of the most expensive hobbies they could have chosen, but they love it. So if I was buying a home right now, one of the things I'd have to think about is, if it came down to it, would I be okay, cutting this out in order to make this home fit my budget? Now, I'm not going to answer that question because I don't know who's on and I don't know if my wife or kids are listening. But the one thing is, horseback riding wouldn't have shown up on my credit report. So if you were looking at my numbers on paper, it would kind of appear that I had a lot more disposable income than I really did. So these are some of the things that as a first-time home buyer, you might have to look into. If you buy a home on the higher end of your budget, you want to ask yourself, how's this going to change other things in your life? We want to make sure that we're setting you up for success. And so we want you to be able to buy a home and still live the life that you're accustomed to or that you just dream of. There's a lot of different mortgage programs out there that can kind of help get to this goal. And none of them are really better than one another. They're all just different. So depending on your unique situation and short and long-term goals, one of these programs that we have or can offer you may be a better fit. Now, I'm not going to go into a lot of detail on the loan programs. If people are interested in getting more details, they can reach out and we can kind of talk one-on-one so that we can really, customize it for that individual. But Triangle does have, some unique products that are kind of exclusive to Triangle. One of them is our 5/5 adjustable rate mortgage. We typically package this as kind of a first-time home buyer's loan. And the reason it has some advantages over a traditional loan program is lower down payment requirements. So you can get away with as little as 3% for a down payment. We're going to give you $1,000 towards your closing costs. And it also has loan terms that go out to 40 years. Now, most people don't want a loan for 40 years, but what it does is it creates a good cash flow situation. So it keeps payments low and maybe still allows you to buy the home of your dreams and keep all the rest of the stuff in place. So if you want, you can go to the next slide. All right, so documents that you would bring to your appointment or email to us if we're doing this virtually. Most of this is pretty self-explanatory, and the main goal with collecting documents is to get as much information about you as we can so that we can pretty much accurately assess all of your income and assets. So when we get you approved, we know that these numbers are going to work. For most people, if you're a W-2 employee, it's going to be most recent pay stub, 2 years W-2s, 2 months bank statements. And this would kind of be with any financial institution you were banking with. Most recent statements for 401ks, IRAs, 403bs. And then if you're self-employed, we got to get you with a few more things. It would be, 2 years tax returns. And then obviously if you file a business tax return, we'd get 2 years of those as well. When it comes to qualifying, could also use other sources of income. So if you do get a pension, Social Security, child support, or alimony, and you want to use that to qualify, those are all acceptable things that we can take into account. So if you want, you can go to the next slide. All right, so in a perfect world, right now, congratulations, everyone's pretty much been approved. Now, This is kind of where phase 2 is going to start of the process. And you're going to basically start looking and working with a realtor. Now, we'd provide you at this point with a pre-approval letter, and that's going to say that, you know, you've gone through the process, we've looked at your income and assets, and we've pre-qualified you for a specific dollar amount. That's now going to help you to work with your realtor to make sure that the homes you're looking at are going to fit inside that budget. And then you can go to next slide. All right, so once you have the pre-approval letter, it's time to go shopping. Now, you're going to start working with your realtor at this point, and they're going to start showing you different properties so that you can get an idea of what's out there and what's in your budget. Now, this doesn't mean that you're going to pretty much drop us from the process, because you want to keep us in the loop. There's a lot of things in the process now that could affect your approval. So things to take into consideration are things like the town could play a big factor to stay within your approval. Now, some towns have really high taxes and some don't. So for me, I've lived in several different towns up here. I've lived in Nashua and Hollis. Now, Nashua has much lower taxes than Hollis. So if I was purchasing and I bought a home in Nashua that was 300,000 versus a house in Hollis, the house in Hollis, because the taxes are going to be higher, would end up being a little bit more expensive and could potentially change my budget. All right, go to the next slide. All right, so making an offer. So you found a home and you made an offer. Jody, our realtor, is going to kind of go over more about the offers themselves. And this is kind of where having a good realtor can really give you an advantage over the competition, because it's a very competitive market out there. And having a good realtor is going to mean they're going to position your offer to succeed. Now, this for most people is one of the harder parts, because your nerves. Putting in an offer is horrible, because if you have to wait 48 hours to get an answer, you pretty much don't sleep for that time period. Now, having an experienced realtor is good too, because this can help you when things go good, and it can also help you when things don't go so good. I know from experience, Jody had helped my in-laws out. They were trying to purchase a home and had a bunch of issues with it. Jody was able to get them out of the situation, and he ended up finding them something 4 houses down. So every time I come home and my mother-in-law is wandering around in my house, I always have Jody to thank for that. And if you want, you can go to the next slide. All right, so offers accepted. So this is where phase 2 really kicks off. So we had you pre-approved, we had all the financial information. Now that we have a specific property, you're going to meet with us again, because we got to update all your paperwork, and we're going to update it to, now we can lock your interest rate, and we can update it for that specific property. So we'll get the property address in there and update the taxes and insurance, so you'll know pretty closely what your new payment is going to be. Now, at this point, now that you have the property, we got to make sure that it meets your specifications. So typically at this point, we're going to get a home inspection underway. Now, Triangle's not really involved with the home inspections, and Jody will probably touch a little bit more on this, but it's pretty important to get a home inspection. They're going to go through the home with a fine-tooth comb, and it's going to make sure that, you know, before you move forward with it, that there's nothing structurally wrong. Now, we'll also get an appraisal done. The appraisal is just going to justify the value. We want to make sure, obviously, if you're spending a significant amount of money, that what you're buying is worth it. And you'll bring some additional documents with you too. Most of this is going to be things that are exclusive to the property, like copies of deeds and tax bills, so that we can finalize most of our paperwork. So can you pop to the next slide?
Actually, I think that wraps you up, Ryan. You did
Perfect.
a great job. Terrific
All
job.
right.
Thank you.
Yeah, so that's all I have tonight. So obviously, you know, this was a crash course. We went over a lot of stuff really quickly. If anybody wants more details, obviously there's going to be some information at the end where you can get in contact with me, and we could work one-on-one on, you know, going over some different products and options for you.
Excellent. Thank you so much. Thank you so much, Ryan. And I am monitoring the chat. I don't see any chat questions just yet. So
Well, hopefully that means I did good.
Right? Exactly. But we will have an opportunity to, oh, actually, hold on one second. Let's see. It looks like maybe a couple came in. Oh, okay. All right. So here's one for you, Ryan. What happens if after your offer is accepted, the home inspection doesn't go as planned? Are you still locked in?
Well, that's why having a good realtor is important. The Jody will probably touch on this, so I don't really want to go into too much. But by having a realtor, they are drawing up these contracts that basically have different things built into them that allow you to get out of these contracts if the home doesn't meet, your specifications.
Excellent.
And I mean, the verbiage could be vague. It could just say, based on satisfactory home inspection. Now, satisfactory home inspection could be pretty vague. So that does give you the ability where if you found something, you're not obligated to buy that home. So that's why working with people with experience is important, because you want to make sure that you don't get stuck or locked into something, if you're not happy with it.
Right. Right. Excellent. Okay, great. So here's the next one from Shannon. She asks, what is the minimum credit score to be approved for?
So depending on the program, I don't like to say that there's a minimum credit score because credit's a little hard, because you could have somebody that has a lower credit score and it's because they had medical bills, medical collections. So we don't really approve or deny based on the actual score itself. It's more based on the content. Now, things like credit score can affect other factors of the loan. I know we have Genworth speaking later about private mortgage insurance. If you're not putting 20% down and you need private mortgage insurance, there are some requirements where you do have to have, minimum scores to qualify for those types of products.
Okay, here's a follow-up actually to Ryan. It says, for the pre-approval, does it only look at the 3 major credit reports, or is there more than that?
So that's what we use as a baseline. Now, not everybody, has, we're going to pull Equifax, Experian, and TransUnion. And, some people, we look for obviously a couple trade lines. Now, some people who are newer and may not have as many trade lines as somebody who's had credit longer, we can use things like tier 2 credit, they call it. We could verify rent. We could, get a verification of payment history on a cell phone, things that are kind of non-traditional to help kind of, support and build that credit too.
All right, great. Okay, here's the next question from April. She says, do you qualify as a first-time home buyer if you previously purchased a home with someone else and now you're going solo?
So yeah, so our first time, so there's certain programs out there that, yes, you have to truly be a first-time home buyer. With Triangle Credit Union, our program's really flexible. This 5.5 adjustable rate that I spoke of, it's not the only program, but whether you're a first-time buyer or you're somebody that's done it 15 times, everybody kind of qualifies for this same product. So it can be utilized for first-time buyers or people who are refinancing or buying another home.
Okay, all right. What about if you choose to buy in another state from the state of approval?
So Triangle Credit Union is licensed in the entire state of New Hampshire and the top 4 counties in Massachusetts. So as long as they're kind of in that footprint, and it's the same footprint that is our membership eligibility. But if you were going to go to Maine or Vermont, that's where it goes a little bit out of our reach.
Okay, all right. Here's another one from Brian. They ask, I have a non-taxable income from adult foster care. Can that be used in the qualification process?
I'd have to double check on it, but if it's income and the person lives with you, obviously when you get some of those things for care, it's designated to make sure that you are providing, a specific quality of life for that person. And so in some instances, I believe we could use it to help qualify, but it's going to be on a case-by-case basis. So that's one of those things they would want to get us some of that information early so that we could bounce it off underwriters and other people to just make sure that it would work.
Okay, great. And then April actually had a follow-up question about, she was the one who had asked about if you had a home with somebody else, but her other question was, will you be discussing the different types of loans? But I understood that from what you had said earlier, Ryan, is that this was more of a, just a getting people familiar with the steps. And if there were specific questions about the types of loans, then maybe that's a follow-up conversation with you, maybe via email or on the phone.
Yeah, those are things I like to do one-on-one. And the main reason is, like I talked about, there's so many different variables when you're qualifying. Everybody's got different goals. So just by kind of talking through some of that stuff, knowing what you want a payment to be like, how long you want the loan, what your budget looks like, that's going to help me narrow down. So we're not talking about 30 different products. We can narrow it down to one or two that seem to best suit your needs. And then we could kind of compare the differences between the two.
All right, great. This question is from Brittany and says, how do you handle self-employment with various monthly income? For example, if you have royalty checks.
So self-employment's tricky. And like I said, case by case basis, there's different underwriting requirements on how that income's treated. That would be one that I would almost want to get a little bit more details, but as long as we can prove that it's consistent and that we can show, the main thing with income is showing consistency. If it's something that we can prove, then there's a chance that we could, be able to use it to qualify.
Great. Awesome. Excellent questions. Thank you so much for all of our attendees who are so diligently listening. And thank you, Ryan, too, for those great answers. Actually, there's one more, Ryan. This is from Shannon. She says, if my daughter receives I think it's SSI, Social Security income,
Yep.
Can I use that as income?
Yeah. Now, some of the times there's restrictions. Some of it depends on how much longer you're going to be receiving it. If it's something that would expire, you're getting it till they're 18 and they're 17 now, we may not be able to use it. But if it's going to continue for, a specific amount of years, then it's something that we could potentially use to qualify as well.
Okay, great. Thank you so much. So Ryan will be on the call towards the end too. So if there are other questions that we have, maybe we could save those until towards the end. And then let's go on to Jody Landry, who is our resident real estate expert. He is from Keller Williams, and he's going to talk to us about what to expect when searching for your new home.
How you doing? I would like to introduce myself. I'm Jody Landry with Keller Williams Gateway Realty in Nashua. Just want to make sure everyone can hear me okay?
We can, Jody.
Great. I'll start off going over a little bit about me, jump into a little bit of a story that might help some of the first-time home buyers that are currently on the fence, whether they want to move into home ownership or the American dream, or continue if you're renting or living with parents or friends. So a little bit about me. I work as a buyer's agent and a listing agent for Keller Williams Realty. The difference between buyer agents and listing agents is buyer agents typically work with buyers like yourselves, and listing agents are normally the agents who list homes. I happen to be both. And the advantage of that is that I see and hear both sides of what's going on in real estate. I see what kind of offers are coming in on my listings. I see what other buyer agents are writing up for their clients. So that being said, working with an agent that covers both of those avenues, sometimes it's more advantageous to win some bids. Right now in this market, it's relatively competitive. I am licensed in New Hampshire and Massachusetts, so I do cover both states. I'll jump into the little story here about home ownership. I worked for a prominent businessman in Nashua, Mr. Hill over at Goodale's Bike Shop. And when I was 23 years old, he told me I should be buying a home. And I said, I don't know where I'm going to be. I was afraid, didn't think I could get approved. And one day I went over to a local bank and sat down with someone for a pre-qualification, just like Ryan was saying. And they ran my numbers. I was pre-qualified. I needed X amount of dollars to purchase the home I was going to try to buy. I didn't have the money at the time, but over the next few months, I did save the money up. I bought my first home, and it was amazing because I came from a family of 7, and I was always programmed that you would get married and buy a home with 2 people. So me doing it by myself was very rewarding to me. One of the things that really made a difference and made me happy about home ownership was my neighbor was moving, and I asked him where he was moving, and he's like, I'm moving across the street because my landlord raised my rent to $1,200 at the time, and the apartment across the street was only about $1,100. And I was only paying just under $900 with my condo fee, my mortgage, interest, taxes, and everything. And the gentleman that was renting was paying more than me. And that was one of the things where home ownership became very rewarding to me. So if any folks out there at this time are on the fence whether you should, make the jump into home ownership, I think it's a great time, talk with, the folks over at Triangle Credit Union to get the approval, and then reach out to a qualified real estate agent. So that's my little story about why people should try to buy a home. I'll go through the process now. Is basically you want to select the real estate agent. And by doing so, talk to your friends, your family, because they can give you the best referral of someone who they had a good experience with. And I think that's important. You can also, go online and find someone, but a lot of times, reach out to your sphere of folks around you. And if you don't know anyone, well, Jody, Landry would love to help you. That being said, you want to find a real estate agent that's going to work very hard for you. Real estate right now is extremely challenging because you have to have the ability to have some thick skin. And when I'm working with my buyers, that one of the things I explain to them that we're probably going to be, looking at a lot of homes. We'll write up some offers. Hopefully we win the first deal, but if we don't, we have to stay the course because it's important, because there's going to be a lot of people right now in this market. They're going to get tired and they're going to fall off. So that gives you an opportunity to get into home ownership. Basically, what I usually do is when I have people reach out to me, I'll have you meet me in my office. My office is over at Trafalgar Square on exit 8, the big glass green building in there. I will have you in. We do a buyer's consultation. So I find out exactly what's important to you, what you're looking for, locations, and schools and other things that are very important to you. Once we sit down and we figure out we want to work together, or if you're working with another agent, you get into an agreement with what they call as a buyer agency, where that agent is going to work very hard for you. One of the things that I think some of the buyers should know is that normally, like if you're working with me, I get paid from the seller. I don't charge my buyers any kind of fee, or if there's any difference between commissions and so forth. So you're able to keep more money in your pocket to get into your home. Once you find an agent, you start going out, you're looking at homes, you select the property. Usually the agent will walk around the house and look for things that might be, things you might want to look for, like if the walls are falling in or huge cracks in the basement. We're not home inspectors by any means, but there's some stuff that's visually there where we can help you select a property. Once you find a property that you want to write up an offer on, normally the offer, will write it up, you submit it. Normally you'd hear back, in some cases, within a few hours or 24 hours. Right now in the process, what a lot of people are doing is homes are being listed on Wednesday. Showings begin on Friday, and showings will happen Friday, Saturday, and Sunday. Offers to be reviewed on Monday. So you just got to have a little bit of that, patience, and like Ryan was explaining, it can be a little stressful, but very rewarding. Once we have an offer that is submitted and it's accepted, the next process is that we need to schedule home inspections. And then normally with the home inspections, you would meet at the property with your agent, and usually it takes about 2.5 to 3 hours, depending on the particular property. Once the inspections are complete, normally within about a day or two, you get your report back, and we go through and we look at things that might be what they call as a material defects of the property. Then we kind of negotiate to have some of the repairs done if repairs are needed. If we negotiate, we come to an agreement, then the homeowner and you as a buyer sign an addendum to move forward. From that point, then the appraisal is ordered. And then normally that's about 7 days after the home inspection. Normally they'll meet the appraiser. If the property does appraise at value, then you move off to the next step in the process, where you're getting more of your documents over to the bank to get ready for the closing. There are a couple things like Ryan was mentioning. If you go into a property and the attic is riddled with mold and you don't want to buy it, then typically you can cancel out your contract. And again, that's something that you can go through with your agent or myself at that point. Once all those contingencies are removed, then you head off to the closing table. I'd like to see if a couple other things I'd like to talk about too that make an importance when you're submitting offers right now is dealing with a local lender. So the importance, like when I see on some of my listings when a pre-approval comes through from Triangle Credit Union, a lot of times I know they've done their due diligence to get you guys where you need to be, the transaction. It creates a tight transaction. Versus sometimes with folks that are working with lenders that are out in Chicago, out in Minnesota, or at different parts of the country. The nice thing is working locally, that if I need or I have any particular questions, then I'm able to pick up the phone and get immediate response from Ryan or underwriters, which is very important right now in this market. So when we do look at offers, there's a lot of weight in who you're approved and qualified with. The other thing I'd like to talk about is the team that you're working with as well, which I think with the lender, I explained, the attorney, the closing attorney, the mortgage insurance folks, that we all work together because there's a lot of moving parts in real estate, and you really need to stay on top of them, and picking a good team to work with is very important. Let me know if anyone has any questions. Actually,
Jody, terrific job. Thank you so much for walking us through that process. And when I first looked at this slide, I have to tell you, I try to be a linear thinker, but I'm probably more on a creative side. So when I saw your slide, I was a little bit overwhelmed, but you did a fantastic job explaining all of those boxes. So well done.
Thanks.
Okay, so we do have a couple of questions. First is from April, and she wants to know, she says, how is the fee determined for the agent? Is it always the seller who pays the agent and not the buyer? And what if you were not the listing agent for the home that was being bought and you were not working with the seller?
Yeah, so basically, when we're looking at properties in the MLS, I see what the the agents are offering as far as the commission splits. So I have privy information on the commissions and to see how much the seller is offering. So all that stuff is happening on the backside. The only time sometimes it gets a little tricky is that if I find you a property where it's a for sale by owner, the owner is just selling it and they're not using a brokerage, then typically if I find that property, then I negotiate with them to pay my fee.
Okay, great. Awesome. Okay, here's our next question. This is from Brittany. She said, what are your thoughts on sellers who are saying no to home inspections?
So great question. I think with the home inspections right now, a lot of people are waiving them. I am not a huge fan of waiving home inspections. So when we're working together, real estate is like a pie. There's a lot of pieces, or a pizza. There's 8 slices. So waiving the home inspections is only 1 slice. So what I need to do is the other 7 slices, I need to create why they want to work with us. So there is some language on the home inspections that we can kind of move around quite a bit. And because I'm a heavy listing agent as well, I see everything. So I have a lot of really, really good agents who are submitting offers, and I'm seeing what they're doing. So that helps me better my game when I'm working with my buyers. Great question.
Yeah, it is a great question. All right, John asks, who chooses the property appraiser?
The property appraiser is chosen by the lender, and I mean, Ryan and you guys would have a better idea, but just through my information is there's appraisers that they work with, and it runs through like a cycle. So we have no idea who they are, so everything is kept clean.
Okay. Alrighty. Libby wants to know, what if you don't have a local bank account? My bank is located in Colorado, thinking of getting my loan through them just due to our long-standing relationship.
So that being said, you can end up, obviously if they do mortgage, that's fine in the state of New Hampshire. But one of the things I do suggest is that because of the weight, when I talked about that pizza and those 8 slices, the lender is one of those slices right now, because I know that there's lenders, when I see pre-qualifications come across the table with my client, and I explain to them that, hey, I had 3 deals fall apart by this lender before. They're not very user-friendly. They're not very attentive, when I need some things done. So sometimes you just got to be careful, but I do work with other lenders throughout the country. But creating strength in your offer is working with a local people. And like I said, Triangle has done an amazing job for myself and my clients.
Thank you for the shameless plug there, Jody. We really appreciate it.
It's true.
Okay. The last question we have for you, Jody, is from Shannon. She says, after making an offer and we found out that, found out that the septic or something major needs to be repaired. Could you talk the buyer down? That's a great question too.
Yeah. So sometimes it depends on the condition of the septic. So that's something that, it has to be negotiated. So whether, they give you a credit towards closing, and then that money, that you're not coming to the closing table, you can use to repair the septic at any particular point. So normally when I'm negotiating home inspections, there's 2 ways of doing it. I ask for the repairs to be done, or you can ask for a certain value of a seller credit.
Okay, great. Awesome. Thank you so much, Jody. Terrific job presenting and great job fielding those questions too. And I'm assuming that you're going to stay on as well, so that if we have questions at the end, you might be able to hop on.
Absolutely.
Okay, terrific. Super. Okay, so this brings up our next segment, which is all about private mortgages, mortgage insurance with Peter Yetman from Genworth Financial. So Peter, how are you tonight?
I am doing great, and thanks for having me on.
Of course. I'll go ahead and jump right to your first slide.
Well, thank you, and I'll try not to talk about the slide too much, and I'll start with saying first-time home buyers and home buyers in general are busy people. You've got to go meet with your loan officer. You've got to go meet with your realtor, and thankfully, you do not have to meet with me. Because the way mortgage insurance works is your lender, Triangle Credit Union, handles everything regarding mortgage insurance. So I'm just here to talk to you a little bit about what it is and how it works, kind of on a big picture. And so what is mortgage insurance? Mortgage insurance is, simply put, default insurance. So when you put less than 20% down as a home buyer, typically the industry considers that a little bit more risky of a loan. So the industry requires that you get mortgage insurance to provide some risk assistance in case that loan goes into default. And currently, I think the numbers are almost at 40% in terms of how much of the mortgage industry is insured. So I say it's almost about 40%. So that includes your private mortgage insurance companies like mine. It includes government mortgage insurance like FHA or VA. So that's a big piece of the mortgage industry pie. So it's very high. And I will say, I'll give you my, we're all sharing our stories. I'll give you my story. Way back when I was much younger, I was looking for my first house, and luckily I was working for a mortgage insurance company, so I knew the industry quite a bit. But my wife and I, with 3 kids, trying to save 20% down was ridiculous. There's no way we could get there. So we made a decision to try to put 5% down and try to get ourselves into the market. And luckily we did, because with putting just 5% down, we were able to buy in 1996 instead of waiting maybe 2 or 3 years longer before we could save that much money. So putting less money down is the real valuable part of mortgage insurance. And if you do look at the slide that's up there now, it says right there in front of you, you can move in faster. You don't have to wait until you put the 20% down. There's more buying power. You can buy a house with as little as 3% down, and there's some savings flexibility. So it works out in your favor. Mortgage insurance is also cancelable, and there's some detail on that on the next slide, but that's something to keep in mind. It also helps mortgage payment control. Lock in a low monthly payment that will go down when MI coverage is canceled. So that's pretty good too. It's tax deductible in some cases, lower payments than other types of loans. So you can skip to the next slide. So they're all good benefits there for doing it that way. When you think about it, you've got so much going on as home buyers, and in the very aggressive real estate market right now. You work with a good loan officer at Triangle, you work with a good realtor at Keller Williams, and you can find your way into a home. And as I said earlier, the mortgage insurance piece of it is all on the back end. You don't have to worry about it because you're working with great people, and they handle that for you. For the mortgage insurance cancellation, this just walks through a little bit of the cancellation process. So even good things come to an end. So that just kind of highlights, cancellation based on the original value and the natural amortization of the loan. Once that loan gets to 80%, the mortgage insurance cancels automatically. And then on the right side, there's a list of things that can happen if you have the ability to cancel it by request. So the LTV must be 75% or less if seasoned for 2 to 5 years. LTV must be 80% or less of current value if service seasoned more than 5 years. So the good thing is that there's a bright side. So you think about it. You buy the home today. You have a mortgage insurance payment built into your total monthly payment you're paying to the credit union. And within a certain amount of time, given the circumstance that you're in, that payment will drop off. So all of a sudden you'll notice, hey, my payment was, $1,400 or whatever. And now it's only X, $1,400 minus X, based on what the payment is on your particular loan. So it's a great benefit. It helps you get into the home sooner, and there's no work for you to do. And like I said, you're busy working with good people, and I'm behind the scenes just providing the insurance for the credit union that they're looking for, and you're off and running. So that's really it. If anybody has any questions.
Great. Thank you so much, Peter. Actually, at this point, I think we only have more of a generic question that actually I can field. And this one's from Liz, and she wants to know, she said, am I able to reference these slides in this presentation after tonight? I'm screenshotting just in case. And yes, Liz, you don't have to take pictures of the screens anymore, although that is that's very nice of you to do that. I feel like that we really have credibility when you take a screenshot of it. But yes, you will have a copy of this presentation, and it will be made available to you. So we'll make sure that everybody that's on the call will be getting a copy of it. So, all right. Are there any other questions for Peter before we go on to Mr. Parodi? Okay, great. All right. Thank you so much, Peter. And you'll stick around as well?
Yes, I will.
Excellent. Thank you so much.
Thank you.
Okay, this brings up Bob Parodi, who is an attorney, and he's with Parodi Law. So welcome, Bob.
Thank you, Terry. How are you?
I'm doing well, thank you.
All set?
I'm all set.
So again, my name is Bob Parodi. I'm an attorney in Nashua. I've been practicing in Nashua since 1978. I've had the privilege of representing Triangle for probably over 30 years now. And I will echo what Jody said. It is a great lender. You're not going to find any better lender around. So the first involvement that we get is at some point along the line, once the sales agreement is signed and once the loan has been approved, Ryan will send over to us the purchase and sales agreement with a title order. And we will do an examination of the records in the registry, and we will do an examination of the tax records and all sorts of records and issue a title opinion to the credit union. And sometimes, not often, but sometimes there are issues with the title that need to be addressed. And actually, my closing disclosure and settlement statement that are attached was such a case. The sellers in that particular case had bought the property in sometime, I think, in the 1970s. And the prior owner's mortgage was undischarged. It was on record. And so that had to be resolved before this closing could go through. But when Ryan, when Ryan is ready, he sends us over the loan instructions. And that gives us the details of your loan and allows us to go forward with scheduling a closing. When we schedule that closing, there are 5 main documents that you should be concerned with. And that is the deed, the note, the mortgage, the closing disclosure, and the settlement statement. Now, most of the time, you're going to get a deed, a warranty deed, and that'll be in the P&S that Jody has has prepared for you. The promissory note will be your promise to pay back the credit union in the terms, the amount of the payment, the length of the payments, etc. And then the mortgage is a document that gets recorded behind the deed, which secures the credit union's payment of the note. We could go to the closing disclosure. So this was a closing disclosure that we have done. And this is a direct result of the loan estimate that Ryan would have given you once your loan was approved. And this tracks the actual numbers based on the date of closing for your particular loan. On the first page, which is on the left, you will see that this is a loan for $321,100 at 3.25%. And it tells you the principal and interest payment. You skip down to the projected payments and you see here years 1 through 8. There's a total payment of $2,101.65. That includes $85.63 worth of monthly PMI payments. So these particular folks here put down, I believe, around $16,000 or $17,000. It was not the requisite 20%, and they got private mortgage insurance, which in this case lasts for about 8 years, and then it disappears. The next box shows the escrow payments that the credit union was going to collect for taxes. The closing costs are towards the bottom of $10,000 plus. And the total that these folks needed to close was $24,583.72. So they purchased a property. In this case, the property purchase price was $338,000, and they borrowed $321,100. On the second page, which is to the right, that is showing you all of the costs associated with the loan. And starting at the top, there's an underwriting fee. There was the appraisal fee. And with respect to the appraiser, there was a question. While the credit union gets the appraiser, I think they have to go through a third party. Years ago, they used to hire their own appraisers, but now I think it's got to be independent. So there's an appraiser, credit report, title insurance, and then you jump down to other costs. There's the recording fees. In New Hampshire, we have what's known as a tax stamp, which means buyer and seller pay equally based on $15 per thousand. They each pay 1/2. So in this case, the buyer paid $2,535, as did the seller towards those tax stamps. You'll see there was collected 2 months of mortgage insurance premiums. Prepaid interest. The credit union operates all of their mortgages on the first of the month. So this particular closing occurred not on the first of the month, but probably the first week of the month, April 8th. And so there was prepaid interest for the balance April, paying the loan up to May 1st. The first mortgage payment on this loan would be June 1st of this year. The credit union also escrowed for taxes. You'll see that down in box G. And so in this case, the borrowers put in 5 months worth of tax escrow with the credit union because the taxes will be due on July 1. And then on the next page, you will see that the people bought owner's title insurance. Go to the next page, please. Oh, I'm sorry. I'm sorry. Back. Sorry, Terry. Nope, back. One more. Yep, there you go. So the buyers bought owner's title insurance. This is a listing of all the costs. The page to the right, gotta go. Next slide. This page to the right is a summary of the transaction. The borrower is on the left, the seller is on the right. And that shows all of the numbers. You go to the bottom line on the left, and there's the $24,583.72 that the buyers need to bring to closing. And the next page, please. And this is just information that is required. The federal government regulates, heavily regulates the mortgage industry. This closing disclosure is required by law, and it has to have information on it that is required. And this is that disclosure of all of that information. And the last document I have, so next slide, please. This is the settlement statement. This is the balance sheet. And you'll see that the seller is on the left-hand side and the buyer is on the right-hand side. In this particular case, there was no real estate agent involved, so there was no commission being shown. But if there were a commission, it would be on the seller side, not on the buyer side, as Jody had mentioned. And so if you look to the buyer side, on the right-hand side of this form, but on the left-hand column, you'll see it lists the purchase price. It lists all the fees that are being paid out to make this transaction work. On the right-hand column on that, this is showing the credits that the buyers have. And there's a credit, they put a deposit of $1,000, they got a loan. We prorated the taxes. The real estate taxes in New Hampshire run April 1st to March 31st. In Nashua, most towns, they're billed twice a year, the so-called June bill and December bill. In this particular case, the taxes were paid through March 31st, 2021. And so the sellers owed the buyers for 8 days worth of taxes. And that's that $162.69. Those two documents together with the deed, note, and mortgage are the main documents that we do for a closing. There's all kinds of other documents, but those are the big ones that you should be aware of. That's it.
Excellent, Bob. Well done. Thank you so much. I've actually had the privilege of sitting through a mortgage process, a closing with Bob. And also I think I've done a couple of refinance with you as well, Bob. So he does a great job for anybody who's out there listening with all of this paperwork. So thank you so much. We do have a couple of questions before we go on. And so I want to actually, let me read those questions now. And I would think that this first one might be for Ryan and maybe Peter. The question is from Kristen, and she asks, what is the effect on mortgage insurance if you later refinance the loan?
Okay, so yeah, this is Ryan from Triangle. So if you refinance the loan, it's think of it as redoing the loan from scratch, and based on that new appraised value, it would determine whether or not PMI was still needed. So I was saying if we were using like 300,000 as the new appraised amount, 240,000 would be 80% of that. So if you needed to borrow less than $240,000, it wouldn't be required anymore. If you needed to borrow 250, then yes, you would need PMI, but you wouldn't need it as long, and it may be cheaper than the initial PMI you were getting, because and Peter can shed light on this. Most of the time it's risk-based, so the closer to 80% you are, the cheaper it typically is when you do a refinance. So it might save you some money too.
Okay, great, awesome. All right, Ryan, I think this one is also, you're going to field this one as well. It says, what are the current interest rates, and is this variable based on credit report, etc.?
So yeah, so it depends on the type of loan. So if you go with a 30-year fixed rate, they're sensitive to credit score. So Right now, our 5.5 adjustable rate mortgage, which is the one that I kind of discussed and outlined kind of a few of the details. That one's a little simpler. So basically, if your credit score is a 650 or above, you're looking at around 2.875% for the interest rate. Now that rate would be locked for 5 years. And then at the end of 5 years, based on whatever the 5-year treasury note would do, would determine whether or not your loan would adjust. If you choose to go with a fixed rate, they're a little bit more sensitive. There's a lot more pricing brackets. So if there was, if you're a difference between a 720 or a 740, you could see differences in rates. And right now, I believe our 30-year fixed rate, if you're looking at a single family home, putting down 20% with a 740 credit score or above, I think the rates right now are hovering around 3.25%. So that's where that 5.5 ARM gives you an advantage. You're going to get a much lower rate than the going 30-year fixed, along with those extra features of the $1,000 for your down payment or towards your closing costs, the 3% down, and potentially being able to stretch that loan out to the 40 years to keep your payments low.
Okay, awesome, great. The last question that we have right now currently in the queue is from Shannon, and she says, can you explain the debt to ratio and how much it could affect the pre-approval process?
So debt to income ratio is important because what it's basically doing is it's assessing the amount of money you make versus what your bills are. Every different loan program has different qualifying ratios. And the reason we have those ratios in place is we don't want you to get into a loan that is more than you can physically afford. So like I said, was kind of giving an example with the different towns you could buy in. If you're approved for a dollar amount, that dollar amount is also going to include what your projected taxes and insurance would be. So if you choose a town that has high taxes, that has to be kind of factored into that debt to income ratio. And so if you were saying, I think I want to live in Nashua, I would try to project taxes in the Nashua area. But if you end up going to Bedford, which is a lot higher, that same home in Bedford may have taxes that are double the amount. And that could end up throwing a debt to income ratio off and potentially causing an issue with the loan. So that's why it's good to kind of keep us in the loop as you're searching, because we can adjust those numbers in the system and get that instant feedback to whether or not it seems like it's going to cause a problem or not.
Okay, great. Thank you, Ryan. Okay, so that's currently we have, I don't think we have any more questions in chat. So I'm just going to go ahead and go over the next couple of slides here. And actually, that's a nice segue, because if you have additional questions that aren't asked tonight, and or you think about something later, and like, oh man, I wish I had asked Ryan, or I wish I asked Bob this question, or Peter, or Jody, then you can always email us at mortgages@triangleco.org. We will give any contact information from all of our presenters. I didn't want to put all of our presenter information on the slide because it would just be a lot of text. So please start with us, and then we will certainly field those inquiries out. Okay, so it's mortgages@triangleco.org. Our website for lots of good information. We actually have a dedicated mortgage website, and that's triangleco.org.mymortgage-online.com. And actually, you can, if that's too much to remember, then you can just go on triangleco.org and select the mortgage option there, and that will take you right to our mortgage website. We're local, so our phone number is 889-2470. And like I said, we can get you any contact information that you want from any of our presenters tonight. So, and a couple more things. This presentation, it is going to be recorded. It is actually being recorded. We have to kind of edit it a little bit, and it will be on our YouTube channel within the next couple of weeks. We're also working on a Spanish version. So for anybody who might need that, that will also be on our YouTube channel. As far as this particular presentation and the questions that we had pertaining to whether or not this information would be available, we will have this presentation available. And I do have the names of the people who had requested it. So we can definitely get you a copy of that. I do have a couple more questions that just came in. Quick question is it always required to put 20% down? Who wants to take that one?
Well, like I said, this is Ryan from Triangle again. I mean, I could take that because that's part of the mortgage qualification. And no, our program allows you to put as little as 3% down. So you don't have to put the full 20%. And obviously, if you do not put the 20%, that's when the private mortgage insurance comes into play. So you don't need to put the 20% down, but if you don't, you'd be required to carry PMI.
Great. Okay, super. Next question. If I was denied a loan, this is from Shannon. If I was denied a loan, not saying that I would be, would you tell me what I would need to do to get approved?
Yeah, to be honest, this is a really good question because
Yeah.
a lot of people don't apply because they're afraid to get denied. To be honest, don't look at denials as a bad thing. If you get denied for a loan, it is going to narrow down exactly what you need to work on to get approved. So it's like a rough draft. If it comes that you just don't have enough money or we need to pay off some stuff to clean up credit, you can work with us and we can tell you where those issues are so that if you're going to put effort towards really making this a reality, you can focus on those areas. And then potentially, 3 to 6 months, once that stuff's corrected, we can give it another try. And maybe now you're meeting the requirements.
Okay, great. Thank you, Ryan. Here's a question from Shannon. Do you work with FHA?
No, so FHA is like a government-sponsored first-time homebuyers program, and we don't offer FHA, but the 5-5 arm that we spoke of, it closely mirrors a lot of the characteristics of an FHA loan, with the ability, like I said, to amortize that loan out to 40 years. And the 40 years is huge. I mean, that could be the difference between, buying in one neighborhood versus getting into the neighborhood you really want. Because by stretching that loan that extra 10 years, it could drop the payments. You could spend more money and have a lower mortgage payment than a traditional 30-year mortgage.
Right. Great.
Actually, can I piggyback that?
Yeah.
Hi, it's Jody with Keller Williams. So what Ryan was just saying, and I believe it was Shannon that was asking the question about the FHA loan. The really nice thing about the loan that Triangle, what Ryan was just talking about, is if you're looking to buy into a condo development, a lot of the condo developments either have FHA expired programs, denied and whatnot. And with the program, I believe that Ryan has, it just gives you some other opportunities to purchase into a condo or into homes. Because right now, I know when as a listing agent, when FHA purchase and sales come through, that they're being overlooked, unfortunately. So with the program that Ryan was just talking about, that gives you, again, that extra, that slice in the pizza that makes your offer stronger.
Excellent. Good
Jody,
point.
that was a great statement.
Good point.
And the other thing too, just to touch base with some of the folks who are listening, where condo living right now, if you're thinking about, if you're currently renting and thinking about, hey, I want to get into home ownership, but some of the price of the homes are a little expensive. Don't be afraid to get into a condo. And if you jump into a condo for now, and then say you run the real estate cycle for about 5 years, where, whether, the prices are going to go up and down, but I'll just say a 5-year cycle. When you go to sell in 5 years, I don't have a crystal ball by any means, but if you do have some equity, you can take that equity and move it into the home of your dreams. Versus to continue to rent at this time. So I'm a firm believer is jump into real estate now if you can, because most people are probably paying very similar rents to what they would be paying owning a home.
Right.
And use the power of equity and appreciation in the market at some point.
Thank you, Jody. Good point. Good points. Okay, we have another follow-up question from Shannon. She says, sorry for all the questions, but my parents are gifting me money towards a down payment. Are there specific documents I would need? Ryan, do you want to take that one?
Yeah. So gift money is definitely acceptable. And there's really not a lot of documentation that they need. The key factor is that you have some skin in the game. So you're just going to be required to have the 3% down. But anything above that can be a gift. And all we require is a gift letter, just stating who's giving you the money, what they're giving you, and that it is a gift and not a loan. So as long as you have somebody like that, that's great that you have that ability to do that, because that could get you closer to that 20% down.
Great. Awesome. And that actually concludes our session for tonight. We want to thank you. We appreciate you all staying with us, and hope you have a great rest of the night. Thank you to our panelists as well. Thanks, guys. Good night.
Thank you.
You're welcome. Good night.